Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now, you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back again, everyone, to another edition of All Things Financial. On this show, I'm trying to cover many of the different areas that we run into as financial planning community, and I want to try to share all of the different categories and components of thought process that goes into helping build financial stabilities. And what we run into is sometimes neglected areas. So no matter what we're working on to develop financial plans, let's say, we sometimes will run into neglected areas. And as I've said before on the show and otherwise, a chain is only as strong as its weakest link. That when I'm going through financial planning programs and developing and designing them, I might get caught up in thinking, oh, look at the good job I'm doing in working out this area and that. And I am always also thinking, what am I missing? And what I want to talk to you about today are one of the components that usually is missing in a financial plan. It's not getting addressed. There are a lot of areas that don't get addressed properly in financial planning because most people, when you say financial planning or even retirement planning, think investments. When I look at anybody's future, which is really what planning is all about, I'm also looking to see where could we fail, where could things fail, or where could external forces cause our plan to fail. And some of those areas are people aren't, if they're in their working years, they don't have any coverage for if they're disabled, that their income will be replaced. So there goes the whole plan. If a person is disabled, they can no longer work for either a temporary period of time or permanently. There go all future 401k contributions. There go all future 401k matches from the employer. There go all the rest of any Social Security contributions. And there go all the rest of any retirement plans contributions that they were doing on their own. And also not able to pay their bills, and maybe their kids now don't have college savings plans continuing. Or we even have to rob from the college savings plans and the retirement plans just to make bills. So that's one weak link. Another one is when we find people in retirement and we say, oh, do we have enough money to retire? And we figure that out. And we don't anticipate, or a lot of people don't, we do, future rising costs, future inflation. Things like that can erode our income where we did have enough to retire. And 10 and 15 years later, we don't have enough to live on. And we didn't lose any money. So that can be a weak link. But another one is what happens in the later years in our lives if we get sick and need nursing home care. And that adds an additional expense onto our budget that we don't have the money to pay for. So we need nursing home insurance or anti-nursing home insurance. So we have health issues that come into financial planning. Well, there's another area that I wanted to talk about today that's also seemingly unaddressed in most financial plans, or at least many financial plans. And that is when we go to the grocery store and something happens and we're in a car accident. And now, no matter how strong our financial plan was otherwise, if we have not built adequate enough asset protection into our insurance, we could get wiped out anyway, and it wouldn't matter what the markets did. So when you look at your car insurance, that might be the one saving feature to the whole financial plan and your whole financial future. If you look at your car insurance policies today, you'll look and never think of that as financial planning. You'll think of car insurance as, hey, I don't know, all I know is the next ad that comes on TV that says I can get it cheaper, I'm calling. The next internet ad that comes out or email that says I can get it cheaper, I'm signing up. I'm going on checking their rates. Because as we all know, these insurance companies are thieves and they just want too much money, and we want to continue to reduce our costs, and the more we could save, the better off we are. And that's the extent of it. That's the extent of shopping. It almost gets to the point, in my experience, that people many times have the same coverages they very first started with. And all they do after that is continue to replace that coverage by having online customer service reps at some of these internet companies or online direct marketing companies ask you over the phone what your coverages are, as if you're qualified to tell them, and then keep comparing, price shopping, quoting on the exact same coverages over and over and over again that you have. But something is lost, usually a little bit is lost every time you do that along the way. So what we run into, sometimes I'll ask people, and I'll ask you right now, everyone watching and everyone listening, what coverages do you have on your car insurance? Almost everyone that I ask that question to would say, I don't know. Well, shame on you, because you should know. That's nobody else's job, folks. That's not your agent's job. That's your job to know what you're covering your own family security for. So I'm going to ask you again, what are you covered for? It is important enough for you to go down and find those policies and look. Because when I say, what are you covered for? And you'll say, well, I don't know. I'll say, well, let me ask you this then. Let's just start with one coverage. What deductible do you have? Well, most people will know that. And I'll say, do you have uninsured motorists? Do you have underinsured motorists? Well, I'm not really sure. Do you have full tort or limited tort? Well, I don't really know. How much liability coverage do you have? I'm not sure. Folks, these are lose everything you have or protect everything you have questions I just asked. They're important enough for you to dig out those policies. And when you do, I'm going to talk to you about you could lose everything you have and have ever worked for if you don't get those answers right. So as you're shopping, the do-it-yourself plan on shopping typically means, here are my coverages, see if you can beat them. Here are my coverages, see if you can beat them. Nobody asks, here are my coverages, see if they're any good. So I'm going to stop this train right now, and I'm going to ask you, I want you all to reevaluate your coverages or contact a professional. You can call our offices. We're independent brokers. We can help you not only shop for insurance, but we can actually help you evaluate your coverages from scratch. If you didn't have anything and we're building a policy from scratch, are these the coverages that you would end up with? The very coverages you have right now. Because typically what we find, as I said, is people just keep repeating the same mistakes as when you first bought your policies. All the agents and people that you're going to for quotes are not asking you typically, do you want additional this? Do you want that? Do you know what full tort or limited? No, they don't ask that. What do you have? Let me see if I can beat it. That's all. And what you have that you're asking them to compare on might not be good to begin with. So you just keep repeating the same mistakes over your whole lives. And it comes to the point where I realize, I think people have the same coverages as the very first agent ever gave them and never changed them. That's not good, folks. Especially when you think your family situation and when you first bought your policies may not have needed as much asset protection as now, many years later. All the assets you've built in your retirement plans, maybe you need different protection. No one's addressing the issue. So I'm going to start into some of this area with you. Number one, liability insurance. If you didn't have any other coverage on your policies, this is the one you want to focus on most. It is the one coverage that if you make a mistake, you take your eyes off the road. I went up Route 79 yesterday, Route 79 North. On Route 79 southbound, I saw looked like 2 and 3 car collisions. The whole front ends of those cars were smashed the whole way up to the windshield. On the first one, there were 2 cars there. And then it couldn't have been more than a couple miles up, there was another one with two cars crashed into each other. So it looked like a chain reaction with a box truck in as the third vehicle. Folks, these accidents can happen. They take their eyes off the road for 1 minute. There were ambulances there and there were fire trucks there. I don't know who they took where, but I do know this. If you're in one of those cars, you could lose everything you have if you don't get what I'm telling you on this show right. So back to this liability coverage, what that is if you take your eyes off the road for 1 minute or make a mistake and cause injury or death or illness or damage to anyone else that is proven to be your fault through your negligence, you're at risk of losing everything you own. You have an opportunity to help protect yourself against that. And what is that through, folks? You guessed it, your liability insurance coverage on your automobile policy. So back to my question. Now it's worth looking up those policies, isn't it? Go get those policies and look this up. How much liability coverage do you have? Are you buying? Is it $100,000, as most people have, like I mentioned a couple weeks ago? $300,000, $250,000, $500,000? How much do you want? Forget about what you have. If I ask you this question without looking up your policies, write down on a piece of paper, how much liability coverage do I think I need, if price was no object, to protect against losing all of what I have? What I see liability insurance as is this. You put all of your assets as a castle. You build your castle, which is everything that you own. And what I say is you put everything into your castle and you build your castle. Liability insurance to me is protection from outsiders being able to take it away. Well, what did they do in the old days with a castle to protect their castles? They built moats, waterways around the castle that are trying to protect outsiders from getting in. So what are they? And they built them up on top of a hill too to make people have to climb up. So the liability insurance to me is like the moat. And people ask me, how much liability insurance do I need? And I'll normally respond with a question, I don't know, how much do you think you'll get sued for? And then they respond with a question, I don't know, that's what I have you for. Well, none of us know how much you're going to get sued for if you ever did. So here's my answer to that question. It is not the right answer. It's just a starting point. And my answer to the question is this. I don't know, how much do you think if someone sued you for, you would say, I would have bought that much coverage had I known in advance. And up to a certain point, that lawsuit could be $1 million or $5 million. But there's a certain point where you'll say, you know what, if they sue me for more than that, they got me. So I would buy up to a certain limit that I think is prudent to protect my family. And many people will say, that's $1 million in today's world, $2 million, something like that, sometimes $5 million, sometimes $50 million. You and only you know what all of your assets are worth to you. You don't insure for only your assets. If you have $300,000 worth of assets and someone sues you for $1 million, you want to insure for the $1 million if you want to make sure not to lose those $300,000 of assets. Think about that. But not 50 million. You know, there's a limit of reason here. So what I want you to do is write down on a piece of paper, blank sheet of paper without pulling out your policies. Here's what I think I should be insured for, which would be prudent. Maybe that number will be $1 million, maybe it'll be $2 million. It certainly won't be the $100,000 that you have now. So write that number down and say, listen, that's number one if money was no object. Here's how much I think the reasonable amount is that I would not have to worry in most circumstances, that I've been responsible. Not over the top, but responsible with my family's security and my children's college, etc. That it would be absorbed within that limit, just like how big do I build the moat? I don't know. How far can they shoot cannons and arrows and catapults? Then I'll build it 100 feet wider than that. Well, how far can they swim? Well, I'll build it deeper than that. That's all I'm asking. Get within reason. Once you get that limit, You now know what you should insure yourself for, no matter what any agent says. No matter what the price is for it, the price for losing everything you have is more expensive. So forget about these prices for right now. When you're price shopping, I think you need to be quality shopping. The only reason you should buy the insurance to begin with is not because the law asks for it, but because you don't want to lose everything you have, and you recognize everybody makes mistakes. Yes, even you might make a mistake someday that you'd want an insurance company's limits to bail you out. Within that limit, by the way, they also provide defense. So you want to choose the company, not the price, with the best attorneys who are going to be the only thing between you and losing everything you have. Now, another coverage on an auto policy, this tort issue. Now, that's a legal issue, and you know I'm not an attorney and I don't give legal advice. So all I can do is give you generalities on this tort issue, on a decision that you get to make on your car insurance. And the decision is this. Hey, Mr. Jones, do you want full tort or limited tort? That's not what they ask. What they ask is, hey, Mr. Jones, do you have limited tort or full tort? Now, isn't that a shame? I only changed one word. Hey, Mr. Jones, do you want full tort or limited tort? Is a much different question than, hey, Mr. Jones, do you have limited tort or full tort? They're not asking the word want. They're asking the word have. What do you have now? So if you made a mistake before, let's keep making the same mistake. That's wrong, folks. That's just wrong. So I'm going to explain tort to the best of my non-legal ability. Tort, as it was explained to us, was, and financial planners and insurance agents, when the law first came out in 1990, Act 90 is what it was called, but it gave us the choice to save money on our car insurance if we would give up our legal rights. Did you know that? That's what this is. Hey, folks, you want to give up your legal rights? We'll save you some money. So a lot of us did it. So you end up with looking at, most of you don't even know what you have. The decision was made so long ago, but do you have limited tort or full tort? Do you want limited tort or full tort? Well, tort, as it was explained to me, as a brief illustration of it, was, just think of tort, substitute where you see the word tort for the right to sue for pain and suffering, or right to sue. So if I'm injured in an accident, I would ask the attorneys, if I have full tort, have the full right to sue, and if I have limited tort, I have limited right to sue. And they said, basically, that's a good understanding of it. I said, right to sue for what? They'd say pain and suffering, and I'd say, I don't understand. And they'd say, okay, here's an example. You get hurt in an accident, you get headaches, you can't sit for more than 5 minutes because of back aches and whiplash. You can no longer work at your desk job or your construction job because of the pain and suffering, but nobody can see the injury. That's a tough one. I break my arm, you could see I'm hurt. I say my back hurts, I have headaches, you can't see it. So it's a tough one. So being able to make a claim against the person or party who hit you for pain and suffering. Yes, you can make a claim for lost income, but many times not for the pain and suffering. So we have issues here. They're serious issues, by the way. So we run into that and we say limited tort or full tort. How much is it saving me on my car insurance policy? How much is it worth to have full tort versus limited tort? Only you and your attorneys can decide that, not your insurance agent. Again, I'm back to when we talk about legal issues, have your attorneys help you make decisions regarding legal issues, just like when we talked about beneficiaries. We don't go to our insurance agents and ask them, what tort do we need? Anyhow, most of the insurance agents are asking you, what tort do you have? Not what tort do you want or need. So you're with the wrong agents anyway if they're not asking those questions. When you shop online, they're always using the word have as a rule. If you find the ones that are using the word need, you've found some special people out there. Very unusual. So that's your second major big area of coverage. Your third one is uninsured motorists and underinsured motorists. Underinsured and underinsured motorists are coverages that if you are injured, and again for this pain and suffering, and it was a claim where the other person was not insured. So whether you have the right to sue or not, you're trying to get money from a rock does you no good. So you're buying on your own policy. When you buy uninsured and underinsured motorist coverage, the limits you wish they had. And since they don't, you're making a claim against your own limits, your own policy for the pain and suffering that someone else caused. You don't all have uninsured and underinsured motorist coverages on your policies. Some of you have bought it, some of you have not. So these are three major areas of insurance. Another major area of insurance and a gap, a missing link in financial plans. Most financial planners, as you know, the people you talk to about your investments and are entrusting all your financial security in for all of your future. Am I safe and am I not exposed to market risk and I can't afford to lose my money? And then they're not talking to you about these other areas. Well, to me, there are holes in a financial plan because it's not a comprehensive financial plan. It's only an investment plan. Huge difference, folks. But here's another one. Someone slipped and fell on your property. You're out golfing and hit someone with a golf ball, or it went off course and you hit a car with a golf ball, caused an accident. Are you covered? Could you lose all of your assets and investment resources and financial security due to those type of things happening? Yes. Are they expensive to solve? Who cares? It's expensive to not solve. So you need to get on this. Get the right professionals in your lives. Don't try to do all this yourself. I tell you this all the time. If you're not seeing a certified financial planner who is competent in all these areas, call our office. Make appointments. Have us review what you have. Have us review your whole plan versus your plan as it stands now. Let us help you fill the gaps. Let us help you evaluate your situations. All right, folks, we're out of time. I appreciate your tuning into another edition of All Things Financial. We'll be back again next week. Thanks for tuning in.
You've been listening to All Things Financial with your friend with the answers to all financial matters, Jack Driscoll of Driscoll Insurance and Financial Services.
Securities and investment advisory services offered through SagePoint Financial Inc., member FINRA SIPC, and registered investment advisor. Insurance services offered through Driscoll Insurance and Financial Services Inc., which is not affiliated with SagePoint Financial Inc.
Or registered as a broker, dealer, or investment advisor. You can reach Driscoll Insurance and Financial Services Incorporated at 412-833-1500. And they are located at 2738 South Park Road, Bethel Park, Pennsylvania, 15102.